Okay. So if today's candle closes, it's going to close bearish. It is going to close bearish, which means we should look for sell opportunity. But as you can see, price is currently at a discount area. We'd love to see price pull back to a premium area before we sell. Price is currently at a discount area, right? Price is currently at a discount area. So we should wait for price to pull back to a premium area before we sell. And you can see the daily average true range value is for 7.9. Then the half average true range is 23.9. So before you sell, price should retrace back at least by 23 pips. Okay, this is on 48. So there's a high probability, since the daily ATR is 47, there's a high probability you can see this from this point to this point is about 62 pips. So there's a high probability they will sweep this high. It is after sweeping this high, I will look for sell on GBP or Euro USD. Let's see for our. So you can see the trap they created here. This is a trap. Let's go to page one. So let me work with this. So you can see there is a fair value gap here that was created, a very tiny fair value gap on 4 hour, this fair value gap. So they fill this gap at this point, this high here now, because most retail traders have expected to sell after the formation of this candle because this fair value gap has been filled. So I would love to see them sweep this high. There was an attempt at this point to fill the fair value gap. They didn't fill it. After the news got released, they filled it at this point. So this high here, most retail traders, their stop losses will be at that high. So there is a high probability that they're going to sweep that high tomorrow. They might use retail sales to sweep that high tomorrow. So I want to ensure that liquidity is swept before taking a trade on GBP USD and Euro USD. I hope that is clear. I hope that is clear. So this EA, when it gives you a bullish bias, you want to ensure that price is at a discount area before you take that trade. Before you take that trade, you want to ensure that price is at a discount area. You can see the status we have here is equilibrium. It's neither discount nor it's neither discount or premium. Okay, so if it is bullish, ensure its price is at what? Price is at what? Bullish price has to be at discount, and if it is bearish, price have to be at a premium area. I hope that is clear. I hope that is clear. Please, if you have any question, please ask. Please ask if you have any question. Let's move to the next pair. Let's see gold. Gold, bullish. Gold is bullish, but let's start with the daily time frame. So gold is bullish, and today's candle most likely will close as a spinning top. It's most likely going to close as a spinning top and might close below the average price. Okay, so there's a high probability the buyers will change from bullish to bearish if tomorrow's candle open below the average price. You should expect sell on gold. But like I told you, what is driving gold right now is not technicals. It's not technical. So gold might just keep, the price might just keep going up. What is driving gold right now is fundamental. That's what is driving gold right now and not technicals. Okay, so but if it closes as a spinning top, we might say a little reversal. Okay, we might say a little reversal. You can see this high here. This high is a big trap. This relative equal high. It's a big trap. So there's a high probability they will still sweep these highs or going bearish. If you're considering selling gold, please be very conservative. Be very conservative. Be very conservative. This is 1 hour. Let's see 15 minutes. Okay. So
No.
15 minutes,
That's
2 days.
how
No
my
flex shift
brother
in
will
market
get.
structure
That my
on 4
brother.
hour. No shift in market structure on 4 hour. There's no shift in market structure on 1 hour. There's also no shift in market structure on 10
That
minutes.
one has impact.
So selling gold is still at a very high risk. Selling gold is still at a very high risk. Okay. Still at a very high risk.
What they call? No, that
$1
one is
USD. I shared this in the morning session that $1 USD don't sweep this high. Liquidity residing at this
just money.
the high of this candle. And that was what happened after they released the CPI data. They had to sweep the high before going bearish.
Please, they should mute themselves now. Mute.
My focus
so
was
that we
on
can hear
EA.
what is being taught.
Okay. One had caught this move, one would have made 35 pips. But my focus was on EA trade. I was just focused on my EA trade, managing my EA trade. I think EA is still a massive profit. Yeah, it's still in profit.
Hello, boss.
Still in profit.
Hello, boss.
I believe they're going to sweep this high here. They're going to sweep this high. And most likely they might want to come and revisit this fair value gap. That's my expectation on euro, Australian dollar. They might want to come and visit this gap again. This would be my first target. This support stone resistance. This support stone resistance would be my first target. So from this point to this point, that's about 100 and something pips. Once price gets to this level, I would take at least 70 to 80% of profit, or I should be out of the trade. I should be out of the trade at this point. 103 pips, that's much. I would be out of the trade at this point. I should be out of the trade at this point. So when I took this trade this morning, my initial stop loss, my stop loss was 50 pips. Was 50 pips. So my stop loss was a few pips below this. Stop loss was around this area. So it was after the news. That was in New York section. After the formation of this AMA candle, the first thing they did there was to sweep all the liquidity residing at this previous low. So after sweeping the liquidity, we had an AMA here. The next candlestick closed bullish. This confirmed a change in trend from bearish to bullish. So I had to adjust my stop loss to the low of this candle. I see no reason leaving the stop loss below that low, because anything that makes price break this level, there's a high probability they will go for my stop loss, which is like 15 pips below this low. So I had to adjust my stop loss to this level. My next plan now is to adjust it to this level, but I'd love to see it sweep this high. If it sweeps this high, okay, if a 4-hour candle closes above this high or this resistance, then I would adjust my stop loss from this level to this level, which is close to my entry price. Okay, there is noise in the background. Okay, a few minutes. Let me mute everyone. A few minutes. Few minutes, please. Few minutes, please. So that is it for Euro Australian dollar. Which other pair do you want me to analyze? If you have questions, please ask if you have questions. I hope you all can hear me. Can you hear me? Can you hear me?
Yes, we can hear you.
Okay.
Yes, we can hear you.
All right, all right. You have questions? You have questions? Is there any other pair you want me to analyze? I need to get back to work.
EU.
You have EU. EU. I'll analyze EU. You joined the class late. So let's start with the daily time frame. EU, you can see today's candle is likely going to close bearish, and tomorrow's candle will open below the average price of today's candle. So we should expect sell. Should expect sell. But before you sell, as you can see, price is currently at a discount area. This is not a good price to sell. This is not a good price to sell. Look at where price has been dropping. That's why on this dashboard, when you see bearish, look at the charts. You can see where price has been dropping. So this bearish signal would have been from this point. So if you didn't execute at this point, when the signal came up, you cannot be executing your sell at this point. So know when the market has gone far from your entry level, so that you don't jump in or take a very high risk on the trade. Very important. Very important. So today's candle closes, it closes bearish, but I personally will not sell from the current market price. This is not a good price to sell. I would love to see price pull back to a premium area, okay, before I would sell. I would love to see price sweep this high, the high of yesterday, which has not been swept today. Most likely they will sweep it tomorrow. They might use retail sales. Retail sales will be released tomorrow. Retail sales will be released tomorrow, so they are most likely going to use retail sales to sweep this high, push price up a little before going bearish. That's my expectation on Euro USD. Euro USD didn't do much today. Didn't do much. What's the range? Just 43 pips from the high to the low. Didn't do much today. Let's say it was just a ranging market on Euro. Didn't do much. It didn't do much. So I'd love to see price probably work with this. You can see this fair value gap here. You can see this fair value gap here. So this would be a very good area to look for yourselves. Yeah. See, there has been several attempts to fill this gap. First attempt, second attempt. So I see this as a trap. It's an area of liquidity. There's a high probability they will go fill that gap. Let's see, from this point to this point is about one. It's much. About 74 pips. That's much. So they might. Well, I would love to see them sweep this high before going bearish. Once they sweep this high, if they're able to sweep this high, then I'll look for sales. I hope that is clear. I hope that is clear. Any question? Any question? Mr.
Right,
Joseph, any question? Yes.
I have some questions.
Okay.
As regard the EA.
Okay.
Now, one of the questions is, if you watch this, the box here on the EA.
Yeah, the left. The left.
Yes.
The left, right?
Yes, sir.
Okay.
Yes, sir. There are some informations there.
Okay.
Which I want to ask this question so that we can all learn, and also I don't know, maybe others have knowledge about, but for me, I don't think I have 100% knowledge of some of this information here.
Okay.
So like this, I understand that the daily bias is bearish.
Yeah.
And the timer, I understand that this is the time the clock. I'll call it the clock. Let me see the clock.
Daily,
And then
that's daily
the
time. Daily time.
Yeah, the daily
That
time.
timer is for daily
So,
time frame. Yeah. When the daily candle will close, that's the timer.
okay, that's when the daily candle
Candle
will
will
close.
close. Yes.
Okay. And the daily ATR, yeah, I understand that. And the ATRF. Now,
Okay.
this stock, I don't really understand what the information this
This
stock,
stock
daily
value,
stock.
this stock value is what will determine if price at discount or premium or equilibrium.
Okay.
So
Okay.
what you should focus on is this status, either equilibrium,
This,
premium, or discount.
okay. 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 Then the midpoint. The midpoint value.
The
And
midpoint
then
value,
this
just leave the midpoint. You don't need the midpoint. You don't need that. What you need is the what's it called? This midpoint is the average price. The midpoint is the average price. So instead of you doing the calculation manually, the expert advisor does the calculation
yeah.
and gives you yes.
Okay. Then this status authorized. When the status is showing authorized, does it mean that one can execute
No, 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 no,
at
no,
that
no, no.
moment?
No, 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 no.
Let me interject about the midpoint. I think the EA plots the midpoint. Am I right?
On the chart, yes,
Yes.
it's on the chart. This is it. I mean, this is the midpoint. This one for yesterday. That's the midpoint.
Okay.
Okay, that's the
And you
midpoint.
take a decision if it is
This anchor,
if
this anchor,
the day's
this
candle.
anchor, this anchor is the opening price for the day. This white line is the opening price for the day.
Okay.
And because the opening price of the day is above the midpoint, then that means the buyers will be sell.
No, no. This was yesterday midpoint. So the first candle of the day opened above the midpoint.
Okay.
It has not calculated the midpoint for today. The candle for today has to close before it calculates the midpoint.
Okay.
Yes.
So what's the relationship between the anchor and the midpoint?
The anchor and the midpoint. The midpoint is used to define the bias for the day.
Correct.
Now, the anchor is the opening price. Now, as price moves from the anchor, that's from the opening price, this E1, this entry level 1 and entry level 2 would adjust. For example, we are looking at this ATR app is 23.9. So for every 23 pip move, this E1 and E2 would adjust. So at any point in time that the market does a reversal of 23.9 pips, it will hit entry 1 level. So once you see that price pulls back to that E1, you can take a buy from there.
Okay.
If price breaks out from the E1, it will aim for the E2. So depending on the candlestick pattern that form at E1, you understand? So if price hits this E1 and a bullish reversal pattern form, you should take your buy from there. But if price breaks out from that E1, it's going for E2. So you wait for price to get to E2, or a bullish reversal pattern can form in between both lines. Price might not get to the E2, but in as much a bullish reversal pattern forms inside this zone between E1 and E2, you can take your buy.
Okay.
Then at some point, I also noticed that sometimes price will go closer to E1, but it won't get there.
Before it pulls back.
Yes.
If it does not get there, bullish reversal pattern. Do you get it? The candlestick pattern that form is what will determine if you should execute without waiting for price to get to E1 or E2. It's the candlestick pattern. Like what we have here now, I'm tempted to take a buy, you know, because now price has its what's it called? E1. You can see it has its E1, and this current candle most likely will close as a spinning bottom, which indicates a buy. And like I said, there's a high probability they want to come and sweep this high. So this is likely going to play out before New York session tomorrow. But that will be trading against the trend, which is my fear. So I would like to flow with the trend instead of trading against the trend. Are you getting me?
Hmm?
Yeah, I would like to flow with the trend and not against the trend.
Then this by the right hand side.
This dashboard.
Yes, by the right hand side, the information we are having there.
Yeah.
I see that there are some steps that the EA is actually monitoring.
Yes.
Now, when it is like this, let me say Euro USD.
Yeah.
Is showing us bull.
Yes.
And on the is saying wait.
Yes.
So this information now, does it really mean that okay, since it is showing us bull and on the signal side is saying wait, we have to wait until it changes to something else. Okay, it changes to, let me say, sell or
buy. Yes. Why it's showing wait? Why it's showing wait is that these two are not in agreement. Remember, we said if it is bullish, price should be at premium. That is why it's showing wait. So it's when the buyers and the status is at if they are in agreement, that is when this will tell you buy or sell. Do you get that?
So now, if I come to my charts,
yes,
and I see the Euro USD, the bias is showing me buy, and the signal is showing me is saying buy as well. The bias is showing BS and the signal buy.
That's a strong confirmation.
I'm coming without going to my chart and maybe doing any further analysis. Can I just click a buy on the chart just for that information?
Yes, you can. But I would advise that you also look at the charts. Okay? You can, but always look at the charts. Always look at the chart. That is why I created that support group, because I know sometimes you might get confused. That's why I created that support group, so that if you are confused, you ask questions. Do you get that? Mr. Joseph, can you hear me?
I can hear you. I can hear you, boss. I can hear you.
All right. All right.
So can I then know the meaning of equilibrium? Because if the status is bearish and the bias is bullish, you will still wait.
Status cannot be bearish. The status would either be premium, discount, or equilibrium.
Okay. Premium, distance, or equilibrium. So
yes.
All right. Now it's clear.
Now, so the buyers we have here, the buyers, for example, now, For example, now we have
It's
a
bullish.
bullish bias for prices at what?
Correct.
Equilibrium. Does that mean you cannot take a trade? You can still take a trade. But when these two are in agreement, that is an A+ setup. But in the case that you have this as bullish and you have price at equilibrium,
That's equilibrium.
all you need to
premium.
do is just, yes. Now, you look at the charts. You want to know if price is at a discount. If price is at a discount, then you can go ahead and buy. If price is at a discount, you can go ahead and buy. Then you wait. For example, you want to buy. You want to buy. This is Euro USD. If you want to buy, you want to wait for price to drop, maybe by 23 pips before you look for buy tomorrow. There should be a little drop on Euro USD before you buy. Are you getting it? Using this ATRF value.
Correct.
And I've noticed that this thing plays out most times in New York session. That has been my observation. New York session, that reversal always occur in New York session. Like this ATRF in New York session, it will reverse, then continue in that direction. This reversal most times takes place in New York session between 3 and 5. Between 3 and 5.
Okay. So one more question.
Okay.
Now, if the bias is bullish,
yes,
and this bias that is giving me a bullish bias, and maybe my stock value for the day is actually at let me see, it's giving me a bullish bias, and my stock value for the day is at a discount. And
that's a strong.
This okay, if this information that it's actually giving me is against the trend, can I still take the trade?
How would you know it's against the trend?
Now, maybe the trend, the long-term trend is maybe bearish. Let me say the long-term trend is bearish.
Once you've known, if you are able to identify the long-term trend to be bearish, then follow that long-term trend.
Okay, I should ignore this. Maybe
yes,
I'll call it.
Yes, and if you insist on executing the trade, you risk less. You don't use the same lot size you use when you are flowing with the trend.
Okay.
You don't use the same lot size on trades when you're trading against the trend. So if you're risking 0.1 lot size, flowing with the trend, on trades that are against the trend, you should be risking maybe 0.03 lot size or 0.04 lot size. Your risk has to be less. For example, if I'm going to take this trade tomorrow, if I see a setup in London session and I want to buy this Euro USD, but I'm going to risk less. I'm not going to take much risk because I'm trading against the trend. You can see what we have here. It has been forming a series of lower, high, lower, low, lower, high, lower, low. So I cannot buy. I cannot take high risk buying. You get it? I hope that is clear. Please let's end the class. Let's end the class. Meet maybe tomorrow.
All right.
So for those of you in the EA support group, if I'm taking signals, I'll be dropping. Maybe I will do videos and share reasons why I'm taking the signals. I told you in the next 30 days, I'll be any signal I'm taking, I will drop it there so that you know why I'm taking the signal. In the next, maybe after 30 days, you should be able to understand how to use the tool. Okay?
Okay.
Yes. All right. Thank you for your time. Have a wonderful night.
Yep.
That'll be you, right?
What?
I said, as in the signal the recorded signal will be using the EA, right?
Yes. Okay. Good night.